Since the beginning of September, Bitcoin has been trading in a range between $18,000 and $22,400. In today's video, we will learn about how the U.S. Consumer Price Index for September may be the catalyst for Bitcoin to leave its current trading range. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. So watch this video till the end and hit the subscribe button. And click on the bell icon to get notifications for our future videos. So let's begin the video. Analysts believe that a U.S. inflation data due on Thursday could be the trigger that finally causes Bitcoin to leave an abnormally extended period of uncharacteristically low price volatility. According to FactSet, the Labor Department is anticipated to announce on Thursday that the Core Consumer Price Index, CPI, advanced to a year-over-year pace of 6.5% in September from an August reading of 6.3%. The impact of volatile food and energy costs is removed from this core inflation rate. The headline CPI, which includes food and energy goods, is already running hot above 8%. The Federal Reserve has been trying to restore price stability by tightening monetary policy, which has in turn put downward pressure on the prices of risky assets like stocks and cryptocurrencies. A core CPI of 6.5% would be the highest in 4 decades, which helps to explain the alarm among Federal Reserve officials. A too-hot CPI, according to analysts at the major American bank J.P. Morgan, would put stocks at risk of a 5% decline. According to Florian Giovannaxi, head of trading for Coverio, depending on the CPI number, both stocks and risky investments like cryptocurrency might move by 3% either way. A higher or lower CPI could easily result in a -3% or +3% change in equity, and risky assets like cryptocurrencies would respond right away with strong connection. Since the beginning of September, Bitcoin has been trading in a range between $18,000 and $22,400. Therefore, the inflation data can be the catalyst for the cryptocurrency's breakout. According to Pablo Joda, a crypto analyst at Gen2, the largest cryptocurrency by market value is performing similarly to last year, when the price of Bitcoin stayed around $6,000 from March to November, and many believed the market had bottomed out. After that, it decreased by another 50% to $3,000, according to Joda. It remained there for several months before the bull market resumed. The CPI report could be high tomorrow, which could cause another decline in Bitcoin to $17,000. Conversely, any decrease in the CPI could generate a big rally for the crypto market. Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.